Hello, good evening, good morning, good afternoon, wherever you're watching this video from. I want to say welcome to Apex Synthetic Mentorship. My name is Daniel Ikbo, or you can call me Danstar. I am a synthetic mentor and also a currency pair or forex mentor as well. So this video is going to help you by giving you ideas on the strategy that you are to use, how to use it, when to use it, and also to master the strategy in a way that is going to bring you profits and not losses. But although this in this business losses are guaranteed, you are going to make a loss in this business. No matter how good you are going to have a loss. But the good part is with this strategy, I hope you are going to be able to make good profit for yourself. So just follow up and understand it clearly. Do not rush. Do not rush. Take your time to understand this very, very well. So today, making our first video, today we are going to discuss on trend. One of the most important thing in the forex market or even in the synthetic market is for you to know the trend. If you don't know the trend, then you are diving into a deep sea without a safety jacket. That is how it is. You are diving into a deep sea without a safety jacket, because knowing the trend, having an idea which trend it is your safety jacket. So when you dive into the market, which is the sea, then you will hardly get drowned. You are going to survive it. You are going to get something from it. You are going to make your money from it. But if you don't know the trend, then like I said, you are diving into a sea without a safety jacket. So there are types of trend in the market. First, two types of trend. We have the uptrend, we have the uptrend and we have the downtrend. Uptrend and downtrend. What does uptrend mean? Here, uptrend. And whatever we are doing right here, don't forget to jot it down. Have a jotter by your side so that you can go through it later. So like I said, we have two types of trend. One, uptrend. And the next one is what? Downtrend. So this is it. Uptrend and downtrend. Let me write it here. Types of market trend. Types of market trend. So number one, we have the uptrend, and number two, we have the downtrend. Now, what does an uptrend look like, or what is an uptrend? What is an uptrend? An uptrend signifies that the market is bullish. It means that the market is going up. From the language uptrend means that the market is doing what? The market is going up. The market is pulling up. And when market is pulling up, markets make this kind of structure. It makes this kind of structure. So this structure that the market makes is called higher highs, higher lows. In an uptrend, it's called higher highs, higher lows. Higher highs and higher lows. Where is the higher high and where is the higher low here? This is the higher high. This here is the higher high. The one marked with the red is the higher high. And the one marked with the lemon is the higher low. Same with the rest that are going up, as you can see, higher high and the higher low. So an uptrend consists of higher highs and higher lows. So which means if you open the chart and then you see something like this, That is to show you that the market is in an uptrend. If you open your chart and you see the market making higher highs and higher lows, know that the market is in an uptrend. Now, what about a downtrend? What about a downtrend? A downtrend consists of lower highs and lower lows. The downtrend is just the opposite of the uptrend. That is how it is. The downtrend is the opposite of the uptrend. As you can see, this one, it is pulling up, then this one is coming down. Downtrend, it means that the market is doing what? Is coming down. And as the market is coming down, the market form these structures. What kind of structure does it form? It forms a lower high and a lower low. Like I said, a downtrend is the opposite of the uptrend. In the uptrend, it formed what? Higher high and higher lows. But now in the downtrend, those higher highs and higher lows are now called lower highs and lower lows. So now here is your lower high. Here is your lower high. This part marked with the lemon dash is your lower high. And this low here marked with the red line is your lower low. Lower high, lower low. Same with all this one that is here. Lower high, lower low. Lower high, lower low. So that is what the downtrend consists of. The downtrend makes lower highs and lower lows. Lower highs and lower lows. So when you open your chart and then you see this happening, know that the market is in a downtrend. Because why? It is giving you a lower high and a lower low, a lower high, a lower low, lower high and lower lows. So that is how you identify that the market is a downtrend. So those are the types of market trend that we have, both in the currency pairs or the synthetic indices. If you're trading synthetic indices or you're trading currency pairs, those are the types of trend that we have. Those are the trend that you are going to see: uptrend and downtrend. So the market can either move upwards or it moves downwards. The market can move upwards or it moves downwards. So now the question here is, we have known our uptrend and our downtrend. Those are the types of market trend that the market consists of. We have known it. Now, what else are we to know? The next thing we have to know is market structure. Market structure. We have two types of market structure. Market structure. Market structure, this is where traders get their setups from. This is where they get their setups from. Then you see traders making the money. Sometimes you hear traders say, my strategy is SMC, my strategy is CRI, my strategy is support and resistance. Oh, so sorry about the other video. Something turned up. So this is the continuation from where I stopped. So like I said, you hear people say, my strategy is CRI, my strategy is SMC, my strategy is support and resistance, my strategy is this, my strategy is that. It is through the market structure that they get their strategy from. Now, how many types of market structure do we have? We have two types of market structure. Number one, we have the basic market structure. You can jot that down. Basic market structure. Basic market structure. That is number one. We have the basic market structure. And so the basic market structure consists of higher highs and higher lows. Higher highs and higher lows, or lower highs and lower lows. So basically, the basic market structure is this: either this higher high or this lower highs. So the basic market structure, like I said, consists of lower highs, lower lows. I mean higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Keep going, higher highs and higher lows. So that's the basic market structure. And also it could also be lower lows, lower highs, lower lows, lower highs, lower lows and lower highs. That is also the market structure. So the market structure could either be the higher highs and higher lows, or the lower lows and lower highs. Or we can say the market structure is either the structure of an uptrend or the structure of a downtrend. I take that again. The basic market structure is either the structure of an uptrend or the structure of a downtrend. Now, what is the next market structure that we have? The next one is the advanced market structure. This is where traders pay attention to in the market. Yes, this is where traders pay attention to in the market. This is how traders they get their setups, because this is where you will make your money from. This is where the money comes from. This is how you understand the market. The next market structure is what? Advanced market structure. From the name, you should know it. Advanced market structure. It is no more basic market structure. It is now advanced market structure. The first one was basic market structure. And we can see it just consists of only higher highs, higher lows, higher highs, higher lows, or lower highs, lower lows, lower highs, and lower lows. So in the advanced market structure, what does the advanced market structure make up of, or what does it consist of? What does it consist of? First, this is the advanced market structure. This is the advanced market structure. This is the advanced market structure. Advanced market structure. This is how the advanced market structure is. This is how it is. Tap into here. So, as you can see right now, the shape of this advanced market structure is different from the shape of the basic market structure. You can see the big difference there. And so, what does this advanced market structure consist of? What does it consist of? That if you see those things, you know that yes, this is the advanced market structure. Number one, it consists of the sweep. This is our sweep of liquidity. It will give you a sweep of liquidity. And this particular structure here is for an uptrend. That is if you are looking for a buy when the market is in an uptrend. When the market is in an uptrend, this is the advanced market structure you should be looking for in that uptrend. I will also bring out the structure you should look for in the downtrend. So right now, this is the structure that you should look for when the market is in an uptrend. This is the advanced market structure you should be looking for. So this one here consists of what? The sweep of liquidity. And what next? After sweeping this low here, it goes up, it gives this break. This is our first break. That break is called our transactional liquidity, or you could easily call it our break of structure. Yes, you could easily call it your break of structure, or you can call it transactional liquidity, whichever one you want to call it, that you are going to understand quickly. So after giving us our transactional liquidity or our break of structure, we can see other ones that are here. There are other transactional liquidities here. You can see that. Or let me say there are other break of structures here, other break of structures here. And so the first low, after giving the first break from here, after giving the first break after this sweep that is here, the first low that will be given after this break is our structural liquidity. That is our structural liquidity. Structural liquidity. So these are the three things that you should look for in order for you to mark out your advanced market structure. If you can get these things and mark them out, then you have marked out your advanced market structure. So if you're looking for a buy, then you should look for this advanced market structure. First, you should be looking for your first sweep. After the first sweep down to the low side, it gives you the first break to the upside, and the first low after this break is your what? Is your structural liquidity. So here is considered, let me take here as our X. Let me take here as, okay, let me mark here X. Then mark here, for easy understanding, mark here our Y. Let me mark the Y and mark here our Z. Mark here Z. So you can also do this too, so that you could also understand it quickly. So these are the things you should look for your X, Y, and Z. Your X is what? Your X, the first thing you should look for, is your X. After looking for your X, which is your first sweep of liquidity, the sweep of liquidity, this sweep here to the downside. After looking for your X, the next thing you should look for is your what? Is your Y, which is your break, the first break to the upside, or you can call it your transactional liquidity. And the next thing, the last thing you should look for, the third thing you should look for is your Z, which is called the structural liquidity. I take that again, structural liquidity. First thing you have to look for is your X, which is your sweep of liquidity. Second thing you should look for is your Y, which is your transactional liquidity, or you can call it your break of structure. That's the first break to the upside. And the third thing you should look for is your Z, which is your structural liquidity. And after you've marked out all these things, you are clearly going to see this shape. It will clearly come out like this. Immediately you've marked out your X, your Y, and your Z correctly in this way, then your advanced market structure, it will just come out like magic. Bam, you will see it there. It will come out clearly. Yes. And after you've marked out your X, your Y, and your Z, the next thing you have to put is your what? Is where you are going to look for your entry. That is where you look for your entry. So this rectangle here, normally I do mark out my rectangle to identify where I am going to take my entry, where I'm going to enter that market. That rectangle signifies where I will enter my market from. That when market enters into that rectangle, I am to look for my buy entry from there, because this is an advanced market structure for a buy, not a sell. Take note, this is an advanced market structure for a buy, not a sell. It's an advanced market structure for a buy, not a sell. So take note of that. So normally after marking all this, the market must surely take out your structural liquidity. After taking out your structural liquidity, you may choose to give a low, go back, give a high, and tap into your POI. So when the market taps into this rectangle here, this is now going to be your pull to the upside. The market will now reverse from here. You take your buy from here, and the market will now give a reverse to the upside. Then here is going to be where the market is going to target. The market is targeting this high, so it's gonna sweep above that. So guys, that is the advanced market structure for a buy. Now, what is the advanced market structure for a sell? The advanced market structure for a sell is the opposite of the advanced market structure for a buy, which is this. It's the opposite of this, just like you turning this upside down. It's like you turning this upside down. Let me see if I can turn this upside down. Let me see if I can actually turn this upside down. Okay, it's not working that way. I can't turn that upside down. So let me draw it out. It's the opposite of that. It's nothing different. Just exactly like that. It's just that this won't be upside down because you are looking for a sell. Remember, remember, a downtrend, you're looking for a sell in the downtrend and you are looking for a buy in the uptrend. So when you are selling from the downtrend, and when something is coming down, you know it's going to be like upside down. So okay, let's just take for example, you are falling from a tree, something is falling. Okay, let me say you're falling from a tree, and then you know it's going to be upside down. Yeah, it's going to be upside down. So it's just the opposite of this. Is you turning this other one. It's just like you turning this other one upside down, turning this one here upside down, then you're gonna get your structure. So this is how it is. This is how it is. First, it gives you your sweep, your first sweep. Second, it gives you your break to the downside. Third, it gives you your structural liquidity. That's the first high there. You see, so this is what you are to look for. You see, it's just the opposite of the other one. It's the opposite of the other one. Backhand. That is it. Nothing much. It's not hard. Nothing much. You mark here your first sweep. You mark here your first sweep. You mark here your first sweep. You mark here your second. You mark here your break. Sorry guys, sorry for that mistake. You mark here your first break, or you can call it your transactional liquidity. And the first high given after this break is your structural liquidity. Is your structural liquidity. The first break, the first high here after this break is your structural liquidity. Then you can now mark your rectangle here. You mark your rectangle here to identify that is the area where you are going to enter your trade from. You're going to enter your sell from there. That when market gets to that rectangle, boom, you fire your sell from there. So guys, this is the advanced market structure. So this is your X. This is your X right here. That is your X. This here is your Y. This here is your Y. And this here is your Z. This here is your Z. So guys, like I said, it's just the opposite of this. Yes, just the opposite of this. So this one here, this here is the advanced market structure you are to look for in an uptrend. This is the advanced market structure you are to look for in an uptrend. When the market is an uptrend, like you guys know what an uptrend is. I showed you here. Types of market trend, uptrend and downtrend. So an uptrend consists of higher highs, higher lows, higher highs, higher lows. But even as it consists of these higher highs and higher lows, higher highs and higher lows, it is going to give this structure. You will see something like this. First, mark out your sweep, mark out your first break, mark out your second break, so that you won't get confused. The market will not actually give you something like this. When you enter the market, you see this structure already formed like this. No. I know this is going to get some people confused. Let me break this down. When you open your chart, you won't just see, the chart will not just draw this thing exactly like this for you. You see this structure like this. What you do is just come and mark your sweep, mark your break, mark your structural liquidity. No. When the market is in an uptrend, the market normally gives this, your sweep, your break, and this your structural. It is when you're done marking all this, after spotting this spot out, this sweep, your break and your structural, and the market have given other highs, other lows, other highs and other lows, it is later that the market will come down, because the market is now attracted to this your entry here, to this your POI. This rectangle here, I call it POI. That is what I call it. That is my POI. So it is when the market is attracted to this your POY, or we can say attracted to this structure that you have marked out right here, that is when the market will start coming down by giving these other moves here, by giving this low, this high, this low, this high, until it taps into your POY, then pulls up. So that is it. Don't get confused. Don't get confused. So these are the things you should look for: your sweep, your break, and your structural liquidity. The market will keep giving you highs. It is later that the market will start dropping low, give you your high, give you your lower high, your lower low, lower high, lower low, until it taps into here, and then you take your buy from there to now reverse from your POY down to the upside to continue the original trend. So that is how it is. Don't expect to see this structure already like this. Don't expect to see this structure already formed like this. No. Same thing with this. Same thing with this. What you should look for in the downtrend, what you should look for is this: the sweep, your first break, and the first high after this break, your sweep. So after marking all this, the market is going to give you lows, highs, lows, lower highs. Then later, when it is attracted to this structure here, when it's attracted to this your POY there, that's when the market will start giving these highs, these lows, these highs, these lows, until you tap into the and drop to the downside. So guys, that is how it is. So this is how I trade. This is my setup. This is my strategy. I follow this. I follow this up. I don't break this rule. I follow this rule. I follow this rule. I follow this rule. The rule I follow: just look for my sweep, look for my first break, look for my structural liquidity, then wait for the market to create the other moves and come down into my POY, and I take my buy from there. Or if it is in the downtrend, I mark my sweep, which is my X, mark my break, which is my Y, mark my structural liquidity, which is my Z, then wait for the market to form whatever formable it wants to form, and then pull back to my POY and drop from there. So guys, this is where we are gonna draw the curtain for today's class, and I hope that you've gotten something from today's class. So next in our class, we are going to discuss something different. So if you're interested in the next video, please, if you're interested in the next video, or you love what you have seen and you want to watch the next video, guys, please don't forget to subscribe. Make sure you subscribe to the channel Apex Synthetics. Subscribe to the channel, guys, so that you are going to get to watch other videos. With that, you are going to understand the market in a very simple way. This thing takes step by step. It's not in a rush. Step by step, and you are going to know what you need to know. So guys, don't forget to subscribe to Apex Synthetics. Let us grow together. Wish you good luck, guys, and have a nice day.